Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. We're going to go over market conditions and ratios update for a commodities boom or bull market. So we'll just dive right in. We'll right into it. So here's the dollar. Dollar's been weaker over the past half month or so. Big picture view, we hit our head on this resistance line going across here. We hit it a couple of times and we kind of came up there, and I mean, we'll see where this thing heads, but we could head back here. We did have a really big, scary kind of month last month where things were pulling back. People were selling and converting their assets to dollars, and perhaps this will turn around and we head lower. But again, this is a tailwind when it's going lower for commodities and precious metals. Dollar-denominated assets become unfavorable, and that's why it's important to watch this metric. It is a relative strength indicator, DXY. It's not an absolute. So the dollar is getting weaker. We're having inflation. But when people start looking at other currencies, they start comparing currencies, they go to the strongest currency and usually invest in the stock market of that currency. So that's why it's important. If we see a weak dollar, people are not going to be favoring dollar-denominated assets. And we're going to see that commodities to stock ratio is really going to take off in dollar terms. The 10-year yield is coming up. We kind of hit our head on this. It does look like we want to head a little bit lower. So if we were to do kind of zoom in on it, we've got a little bit of basically a descending wedge. So we hit our head, we're coming back lower, and an ascending wedge or a falling wedge usually means that we are going to continue the upward path, especially since it's slanted downward. So that's usually will resolve itself upward. The price of oil and the 10-year yield basically go in tandem together. We saw oil really start to base out, consolidate, and now we're starting to break higher. I think the 10-year yield's going to follow. Looking at bonds are putting in a move higher here, but again, since that's a declining wedge, we're going to get an increasing wedge here, which is pointed upward. When you have these pointed upward, they want to usually break lower. So this is our retest move. I don't know if we're going to get all the way back up. Maybe we get a day that comes up and touches the support line. But from a big picture view, I think this is going to head lower. As weird as that sounds. And I think money is going to rotate out of bonds and into commodities and precious metals. What we have to do is be patient because it will come. And even though this looks like this, wick on the bottom, looking like this, I do think that will eventually kind of roll over. We may come back and retest this. I mean, that's possible. But it's not looking good on the short term for TLT. Commodities continue to rocket higher. Look at this thing just going on up and up and up and up. Looking at it from a short-term perspective, we are breaking out again in a nice big old breakout. We can kind of come through here. We had a false breakdown here. We're coming on up and we're starting to break higher for the commodity CRB index. This is actually looking really strong. We'll see how high this thing goes. I don't suspect this thing to just go straight higher like it has been, but who knows? We do have some resistance kind of through this range up there, kind of coming through here. We've got some resistance through here that we kind of broke through. There's a lot of stuff that we're going to have to get through before we just go start skying higher, so to speak. Gold's been resilient. It's sitting on top of its pattern. We have a nice, good bullish hammer candlestick pattern. We've bounced off of it, and it looks really good to continue higher. Could we bounce further along, going sideways? Yeah, we can. But usually when you get in above support, that is the spot you want to be looking. To be looking to purchase and holding on to your shares. Scrolling on down, crude oil continues its run higher. We've broken out of this pattern. It's looking really good for a move on up. All we need to do is basically lift ourselves away from 115, and we are gonzo. This is going to bode well for the companies. And the companies, people are, you can tell they're positioning in them. They're up massively last Friday. So I think that we're probably going to head higher. That's what it looks like. Natural gas, we've been bouncing around. And we've got a nice good wick on the bottom here. Nice little hammer pattern on the dailies. If we scroll on out, we do have a little wick at the top. We are coming up higher. And it's okay if this pulls back. I don't expect things to just move straight higher. It doesn't even matter the path necessarily. But we've broken out of the big resistance line. We are making our way higher. I do think that we're going to go far higher than where we are today over time. Moving down, we're going to look at uranium's getting a big pullback here. Again, this, I think, is a great buying opportunity down here. And uranium, I think, is just mispriced at the moment. The market will figure that out as natural gas and oil move higher. Uranium's going to be, I think, the next spot to take a look at. And then we'll eventually work our way higher and get a huge bull market out of uranium at some point. Again, I don't want to try to predict the path of it, but the path of least resistance is higher over the medium to short term and long term. Moving on down, looking at some of the CRB to S&P 500. I know the S&P 500 has been getting some good buying pressure lately. So looking at the CRB to S&P 500, yeah, we might pull back a teeny bit. We're getting a little bit of a wick at the top. We can zoom in. We're coming back a little bit, getting a little bit of a pullback. I do think that, we'll get a pullback similar to maybe something like this, and then we'll work our way higher again. But the S&P 500 was getting some buying pressure. It's still in a downtrend. I'll do another video completely on the overall markets. But that's what that one looks like. Platinum to gold ratio looks like platinum's starting to hopefully work its way higher. We've broken out of this downtrend line. We're consolidating a little bit. And that's how markets do. They break, they consolidate. They break, they consolidate. And we're sitting on top of a big pattern, this big falling wedge, which is usually bullish for a move on up eventually. We've got platinum to palladium. That looks like it's putting in a nice, good bullish candlestick. In the short term, it's pulling back a little bit in the short term. So on the monthly short term, it's bullish. On the dailies, we're pulling back a little bit. In the platinum to silver ratio, we've had a monster run up, massive outperformance of platinum compared to silver. We're coming back and consolidating, and I'm expecting this to break out of this big falling wedge eventually and work its way higher. Gold to silver ratio, we're right at that resistance line. I do think this is going to break and work its way lower eventually. Could we break a little higher and do a false breakout? That's kind of what we're doing right now. Yeah, I think so, and then we'll break lower. Looking at palladium to silver, we're just moving sideways. It looks like there's a lot of strong resistance there. I do think this is going to head lower, where silver is going to outperform palladium at some point during this bull market. Dow Jones to gold. It looks like we're firming up here. We could break this downtrend and move on up a little bit. Moving on in, we can see the strength here recently. What I see is kind of this pattern here. Megaphone type pattern going back and forth. On the short term, again, I think gold's going to outperform the Dow Jones Industrial Average over time. There could still be another run in this thing. Looking at gold to oil ratio, we are very low. Well, not very low. We're at 15, which is about average, 15.8. That is the average over a long period of time, and we could very well come all the way back down to 5 or 6. So we still have a long way to go to compress for oil against gold. Copper to gold ratio, again, we are just moving sideways. We're right at that support level. There we are, bouncing a little bit higher. I do think this will move on up. People are looking at this, getting all concerned, but the market conditions and the drivers are all still intact. I'm not concerned, but we should see this move on higher. And then uranium's trying to find, it's trying to firm up. That's uranium silver ratio. Again, we're right on that support line. Uranium to the S&P 500, it's bouncing around. The S&P 500 is pulling it back a little bit. Uranium to gold ratio, we're right coming there back at support. Uranium to crude oil. Crude oil, I think, is going to pull up first, and then uranium is going to do some crazy stuff, hopefully later. Uranium to copper ratio, again, we haven't broken out yet, but hopefully we will. And then the Baltic Dry Index, looks like it's pulling back. We tried breaking out here. It's not ready yet. It's pulling on back, and we just have to be patient. Looking at lithium, lithium's getting a little bit of a bloody nose, slowing down. You can see this thing starting to roll over a little bit and getting a little bit comfortable where it's at. Coming on down, we've got lumber. Lumber looks like it's trying to find a bottom here and start to move on up. We are at the support levels down here. So yeah, I think we're going to just be bouncing back and forth in this gigantic pattern for lumber. Nickel has been moving sideways for a little while, but it has this is like a broken market. It just broke and then it's just been moving. This does look like a little bit of a valley of despair, which we could eventually work our way higher. Looking at palladium priced in dollars, it's been moving up the past day. I do think this will go down over time, though. I could be wrong. And I always see this pattern, guys. This is a very... We're doing this pattern right now in a lot of stuff. But, yeah, it's looking good. We've got cocoa futures still basically tightening up, squeezing up for a move higher. We've got wheat futures that are up in no man's land way up there. We've got soybeans that are way up there. Wow, this thing looks like it's rolling higher here. That looks good. We've got corn moving higher up there, right above support. That looks good as well. And then copper priced in dollars, continuing to bounce off support and move on higher here. So that looks good. Looking at the housing starts, we'll go through some of these. The housing starts remain elevated, still looks good. We are above this long-term average. This is still a inflationary period. The PPI is still rocketing higher. This is the May data, and this usually precedes the consumer price index. Now, I think that we will remain at higher rates, not a rate that is higher than normal inflation is what I am suspecting for a while. So the rates can bounce around. It can go down. We can have disinflation, but the rates themselves will be higher overall. So I think we'll have higher rates of inflation for a while. And we've got the inflation rate is right on top of this long-term resistance support line. It's way above it. They calculate this differently now, so it's kind of, we're probably up in here. We've already broken out, so we're going to have, I think we're going to go into an inflationary period for a while. And then aluminum has been pulling back. We've got a nice good wick here. That looks like a buying opportunity to me. And it looks like we are slowing this down here. We're slowing it down, and then eventually we'll slow down and move and turn and go higher. And the Baltic Dry Index, based in dollars, we've got a nice big pullback here. Still above the long-term support, and we're just flopping around a little bit. I wouldn't be afraid. Just hold on to your shares and be patient. But that's what we've got for the updates, guys. It looks good. Everything looks good. Everything looks intact. The CRB index looks really good. It's breaking out to the upside. Oil looks really good. The energy sector looks really good for short, medium term. Again, these things can bounce all over the place. Not too much worried about the short term. The long term, they do look good. So nothing to worry about. Everything's intact for the commodity bull market. All you got to do is subscribe to the Platinum membership in the website, in the description link below. And you just have to be patient. That's all you got to do. Give me a thumb up for the content. Subscribe to the channel here, and we'll catch you next time. This is Finding Value.